In this video, I'm going to show you a lot of the factors you need to consider before you determine when you're going to file for Social Security. Coming up next on Holy Schmidt.
Holy Schmidt!
Now let's talk about the Social Security break-even analysis you see on the board behind me. Let me start by saying that this is not a good way to determine when you should file. The fact of the matter is, it used to be the gospel for filing, and it was even on the Social Security website. You would just go on there, plug in a few variables, and you'd have a recommendation. The Social Security Administration has since taken that down because they know that it's not just about maxing out your total income, because there are a lot of issues around your life, your obligations, etc. that come into play that can't be captured on a chart like this. But this is a good foundation to start framing the conversation. So let's talk about what we have here. We have three different lines. You have a line for the cash flow if you file for Social Security at age 62, one if you file for Social Security at age 67, and one if you file for Social Security at age 70. These numbers come right from the calculator on the Social Security website. And at age 62, if you make $60,000 a year, that's your last income, you'll receive approximately $1,180 per month as a single individual. If you assume that the average person passes away at 78, which is what this chart does, that's the green line up and down, $1,180 a month will be paid out for 192 months. This comes to a total of $226,560 from the age of retirement to age 78. If you wait until you're 67, changing nothing else but the age, the payment goes up to $789 per month, and the time that you get paid goes down to 132 months. That gives you an outcome of $236,148. And if you waited until after full retirement to age 70, your payment goes up to $2,320 per month for 96 months, for a total of $222,770. So what does this mean? Well, line number one is the line for age 62. And at 76 and a half, you actually lose money on this decision. So if you were to live longer than 76 and a half, if you filed at 62, then you are losing approximately $600 per month every month from that point forward. If you look at the blue line, that's age 67, you're receiving $1,789 per month for 132 months. At age 78, that's a total of $236,148, and you're still coming out financially ahead of filing late until 81 and a half years old. At 81 and a half years old, you would have been better off filing when you were 70 and getting the full $2,320 a month. Again, that's approximately $500, $550 more from age 81 and a half onward. Now, this is really important. The break-even analysis chart is a useful chart to begin the discussion, but it's not a good one to make your final decision because there are so many variables that go into deciding when to file for Social Security. And that is what's coming up next. We're now going to go to the computer and we're going to go through a presentation, and I'm going to talk you through a lot of different points that you need to consider before making that final decision. All right, here we are at the computer. Now let's talk about what I call the triad, the three areas of focus for filers for Social Security. The first is just straight numbers. Back in the day, several years ago, the Social Security Administration provided the Social Security benefit recipients with a break-even calculation on the website. And you would provide your age, your life expectancy, and that's about it. It would tell you at that point in time whether it was beneficial for you to file early or file late. But it was a very crude way of looking at the benefit, and frankly, there are much better ways, including what you're going through now, to determine when you should file. The second point in the triad really involves your individual situation. There are a lot of personal reasons that people may need to take the funds early. And there are also some where, believe it or not, you may need or want to take them late. And the last is unlocking other benefits. Some benefits won't unlock or won't be paid out until you file for Social Security. This chart shows the percentage of filers by age and gender. Now you'll notice something here in the far right-hand column. 65%, almost 2/3 of Social Security recipients file before full retirement age. Almost 2/3. I can tell you that this is hardly the right decision for many of them, but the question is, why do they do it? Let's go over some bad reasons to file early first. The first is fear of missing out, aka a fear of a rules change or Social Security Administration bankruptcy. An SSA bankruptcy is highly unlikely. There are a lot of ways for the government to raise taxes to pay for Social Security outside of taxing your paycheck for Social Security. And I would say it's also equally unlikely that there will be a rules change around those that are at or near retirement age, simply because they've planned their entire retirement around that 62 to 67 band. So if you are approaching 62 through 67, it's unlikely that any changes will affect you. They might affect your children or those in between your children's age and your age, but if you're close, it would be unlikely that they would change it on you right before you file for Social Security. The next reason is because your friends are doing it that way. Believe it or not, this used to be the number one reason people would file early. They'd sit around the table playing cards or watching a football game with their friends, and the subject would come up, and one mentioned that they were filing early. All of a sudden, the whole room was filing early. But there's no critical thinking there, and frankly, it's a horrible way to make a decision on when to take Social Security. The third point is the kid in the candy store syndrome. You get to pick. Is it 62, 63, 65, 67, 70? Go ahead and make a choice. It's all up to you. Some people will just file because they have the choice. And maybe they'll wait a year, maybe they'll wait 2 years. It just feels like the right decision, but there's no decision actually being made. My assumption is that if you're watching this video, that isn't you because you're actually putting thought into the various reasons to wait or go early. Another bad reason is that it's an easy way to boost current income for luxuries that the recipient couldn't ordinarily afford. A new car, a trip to Hawaii, gifts for all of your family. All of those are not great reasons to file early because you also fall into the income trap of provisional income more than likely. The last is, hey, I've waited over 40 years. Why not? Now that is probably the worst reason of all because there's no question being asked. The question that's being asked is, should I throw caution to the wind? Should I just do it or not? Let's talk about possible good reasons to take benefits early. The first is that filing unlocks another family member's benefits. And the number one benefit that it unlocks is the spousal benefit. A spouse can either claim 50% of your benefit or 100% of their benefit while you're still alive. And if 50% of your benefit is bigger than 100% of their benefit, that actually might be a great reason to go early. The next is that the filer does not expect to make it to break even. Personal health issues are quite common in this age group. While it's not common for someone to know at around 62, 63 what their mortality might look like, if someone does have an insight into that, then it's certainly a valid consideration. The next is low or no provisional income now versus later. Again, provisional income means that you receive enough taxable money and tax-free interest from something like a municipal bond where your benefits actually become taxable. And the more you make, the more taxable they become. If for some reason you expect to receive a lot more taxable income later on in life, and you believe your Social Security benefits are going to be reduced by income tax, it might make sense to take money now. Some reasons might be that you expect to inherit investment property from one of your parents, or you inherit a family business in a few years, or maybe you're building a business now that is going to take off and you know it's going to take off, but it might take several years before it takes off. Provisional income is a perfectly legitimate reason to consider taking benefits early. The next is that you will adopt a higher spousal benefit when your partner files. If you are receiving a little bit now, but when your partner unlocks their Social Security benefit and you automatically get half, 50%, if that number is more than what you would get now, you're actually leaving money on the table by not filing. Next is you will adopt a higher survivor benefit when your partner passes. The survivor benefit basically is the amount you receive when your spouse passes away, equivalent to what they were making. If their number is higher than your number, again, there's no reason for you to wait because you're only going to get theirs or yours. You're not going to get both. The last good reason is that you just need the money. Life has been hard, or there are big expenses that need to be dealt with. They're immediate, and you have to deal with it, so you just need the money. The next section is possible good reasons to take benefits at full retirement age, or even later. The first is pretty obvious, but the payment is significantly higher, sometimes as much as 35, 40, 50% higher in some circumstances. The next is that you're in good health and you have a long life expectancy. If you look at your parents' age and they are still going, first of all, that's outstanding. But second of all, if you have long life in your genes, it's probably a good idea to file as late as you possibly can because the payment is higher, and break even, if you wait to full retirement age, is somewhere between 81 and 83 in most cases. The next is that you're still working. And as we talked about before, provisional income kicks in and your Social Security benefits are taxable at any age, but they're taxable if you have other income coming in up to 85%. So by waiting to take the Social Security benefit until later, you are not taking a reduced benefit, which is further reduced by income tax. The next is if you plan on drawing more from your 401k or your IRA earlier rather than later in retirement, because drawing on the 401k in most circumstances, unless it's a Roth, drawing from a 401k or IRA is a taxable event, and that often creates provisional income issues. Some reasons people do this is because they want to go on a big trip or they want to enjoy travel in the early years of their retirement, and they have a nice nest egg in their 401k and their IRA, but they don't really need the Social Security benefits. And so therefore, traveling early and then taking the benefits later is what's right for them. Another good reason is that you own assets that provide decreasing income over time, such as a variable annuity, a royalty stream, etc. A few final points. First, you're going to have to do a little work on your own because there aren't certified experts in Social Security the way that there might be certifications for other areas of the financial services and financial advice market. The second is that when you are looking for people to help you, there are some basic questions that they should know. Those questions are in the description below, so feel free to read those and use those to help you guide your way. Finally, if you like this video and you want to see more on this topic, please consider subscribing below and clicking notifications so that you get notified the next time I post a video. This is Jeff Schmidt. Thanks for watching.